Now here's how I made 45% gains while trading the tariff dip this past spring.
Big bad.
Hey y'all, my name is John Mitchell and I'm a certified financial coach. The purpose of this YouTube channel and this video is to teach you that through working your regular day jobs, you can still achieve great wealth over time. Today's video is going to be discussing how to trade stocks on your regular 9-to-5 job and how to succeed doing so. So let's jump on in. I brought this up in my video last week where I reviewed my dividend portfolio, which I'll have linked up here now. And in that video, I discussed how it's intriguing that the stock trading hours are from 9 a.m. to 4 p.m. Eastern time. And funny enough, that's when just about everybody else is at work. So the question is, how can one trade stocks and build wealth that way while at work? Because if you didn't know, most companies frown upon it because it's usually called moonlighting, which is using company time to work and grow your own wealth. Be that as it may, fortunately for us, that means day trading is off the table, which I think if you look at the statistics, for most people, that's probably a good thing. So if we still want to trade stocks and make money, how can we do so outside of stock trading hours and still achieve results? Well, let me show you. My trading philosophy comes from a board game of all things called Cashflow. Cashflow was created by Rich Dad Poor Dad and his company, and the board game is designed to teach people how to think a little differently about money. In that board game, he teaches you how to buy stocks. Now, it's not the traditional way in a brokerage. He provides simple, basic name stocks, and these stocks have highs and lows. Well, funny enough, when the stocks have lows, it's usually a bad current event going on about them. So with that, as you can see on the screen here, our example to show this is going to be the company Boeing. So if you remember back at the end of 2024, Boeing had a lot of problems with workers going on strike. If you look at the overview, which again, take it with a grain of salt, but it's pretty accurate and I love it. Either way, the strike lasted about 53 days. Now, if we jump over to Boeing's stock price here, we can see there we're August there, September is about this time frame. So the strike started about here. You can see my cursor and lasted pretty much through the end of November. So you can see their stock price fell while on strike. What's crazy about that is, it's reported on the news. And while you may not be the first person to hear about this news, we can still see that it lasted a long time and you could have gotten in at any point during this period of time. Now, if we take the same company, look at another example, let's jump all the way to April. I did a video on this back in April at the time when stocks were the tariffs were going in place and it was a great time to buy stocks. You could have bought at the low where Boeing was $131. And if you just bought then, let's say you skipped the buy with the workers' strike, but waited till then in April to buy at $131 a share, your shares are now worth $226 as of close this past Friday. How awesome is that? I know it's a little counterintuitive, but with this trading philosophy, you're looking for bad news. Bad news is actually a good thing because that means stock prices generally go down because as we talked in that previous video, stock pricing largely is based off of, yes, a company's value, but also consumer sentiment. So if a consumer or trader feels a certain way about a certain company, that company may do really good or really bad, even if it's a great company. Now, the catch here is, yes, we're looking for bad news, but we're looking for bad news in solid companies. I'm talking Boeing, NVDA, which we'll talk about later, Microsoft, Apple, like big companies like S&P 500 level companies that have bad news. And here's why. You can never make any guarantees with your trading. So if we're going to take risks while trading, we want to look for companies that are going to be around for a long time, right? Boeing's been around for decades on end. And so I know if a little bit of bad news happens to Boeing, they'll probably secure another contract with the military or the government or somebody or some other government and come out on top at the end of the day. Now, it's no guarantee that this will happen. We're just looking to increase the chance or the likelihood that the company will rebound after the bad news. If you haven't already, go ahead and like this video and subscribe for future content, as it really helps me know what y'all like to see and want to see in the future. With all the teaching out of the way, we're now going to jump into how I made 45% gains on trading NVIDIA during the tariff scare. All right, so jumping into that trade, you can see my trade history here for just the company NVIDIA. I bought the company on April 7th, 2025, and that was at $97 a share, just over $97 a share. If we look at the chart here to compare, I think I just have it out of view here, but it's on the back side. It's down here is the gist. So I bought the company right about there, $97 a share, as you can see on your far right-hand side of the screen on that y-axis. Now, if we look to when I sold the company on June 5th, and I sold it for $142 a share. That's pretty good, going from 95 to 140 and to $142 a share. Pretty nice. If we look on the chart where that is now, it's approximately here during the spring when I made the trade. Now, if you probably are thinking, wow, John, you missed out on all those other gains after that. Why did you sell early? Well, I had an exit plan. My exit plan was to see if I can make approximately 25% gains on the trade. If I did, I would sell out because, again, you've seen my other videos on my dividend portfolio, and those are really my primary focus. To kind of summarize what I just discussed there, I saw a big company, NVDA, that creates a really important product for the market, which are their computer chips. We saw tariffs coming on. Tariffs are bad for NVIDIA because NVIDIA is a company that's operated outside of the United States primarily, at least for their products, right? So tariffs are bad. Their stock price went down because tariffs started to go up. When the president when the American government lifted the tariffs, their stock price went back up. How did I know it was going to happen? I didn't know for sure. I just assumed, or I saw previous trades with like Vietnam as an example, within the week prior to the day I made this trade, Vietnam came to the table with the United States government. They eliminated some or most of their tariffs, and the United States reciprocated and eliminated most of their tariffs against Vietnam. So I saw, okay, my bet here is that if the governments are willing to negotiate through tariffs, stock prices will go back to normal and everything will be fine again. And my bet paid off. Now, I think it was pretty educated because I looked at the current events, I saw the trend, and I followed it. Can I guarantee this was going to happen? No, but I think it's an educated guess, so it's a little bit better than gambling. All right, so the big question is, how can this supercharge my dividend portfolio? Now, let me show you. Let's say, for example, you have a bunch of stocks. This is my the Imperial Bank of Canada stock, and you can see it's trading at its all-time high of $73.52, which for me is pretty awesome because I bought it all the way at the bottom here. So I feel pretty good about that. But the gist is, let's say the company's all the way up there. If I reinvest my money, or if I have more money to invest in the company at this time, I'm going to lose my buying power. I'm actually going to decrease my cost basis, which I don't want to really do. So what I can do here by trading stocks on the side like this during current events or even through seasons like the 4th of July or Christmas where companies go up for that, I can bank extra cash there doing these trades on the side. And if and when the Imperial Bank stock goes down in value, later on down the road, I can take the money I've traded here, reinvest it into the Imperial Bank to maintain a nice low cost basis so that I can continue to have a great dividend into the future. I hope you got some value out of today's teachings. I wanted to show you that just because you're working a 9-to-5 job doesn't mean you can't trade stocks in the off hours. You can set up trades the night before, have them go through on the following day, because at the end of the day, we're not day trading here. We're not trying to trade pennies on the dollar to make money. We're looking to buy great companies that have bad news that we know because they're great companies, they'll most likely go back up in value over time. We can sell when they achieve higher value later on down the road, and we can use that to reinvest back into our dividends when our dividend companies are at lower values. If you're looking for a financial coach to help you succeed in your financial life, my calendar link is in the description down below where we can link up for a one-on-one appointment, and I can help you achieve the financial dreams you've always wanted to achieve. Other than that, I love each and every one of you, and I'll see y'all in the next video.